Today, I would like to focus on the threats to global prosperity and stability, thus our competitiveness, and the rise of protectionism. And as our domestic agenda cannot be seen separately from global developments around us, let me start with the US tariffs. When the dream of a united Europe began, it started with a very simple idea. Let's create one single market. Let's break barriers, take tariffs down. That is what made us strong. Because our companies grew, and so did the ties that bind us together. And then in the same spirit, we worked with partners across the world, including the United States. We built strong connections that we believed were unbreakable. And trade brought more than prosperity. It brought the idea of a shared way of life. And with commerce, our partnership has also grown. Countless are the friendships across the Atlantic. And because of this collective experience of the last, almost 75 years, so many Europeans feel utterly disheartened by the announcement from the United States. Let me be clear, Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity. We have the largest single market in the world. We have the strength to negotiate. We have the power to push back. And the people of Europe should know that together we will always promote and defend our interests and our values, and together we will always stand up for our Europe. So far, the US administration has announced a 25% increase of tariffs on imports of steel and aluminium, cars and car parts. The next sectors facing tariffs will be semiconductors, pharmaceuticals and timber. And tomorrow we expect another announcement with so-called reciprocal tariffs that will immediately apply to almost all goods and many countries in the world. Of course, there are severe issues in the world of trade, without any question. Overcapacities, we know about the imbalances. We see unfair subsidies, denial of market access, or the IP theft. And I hear Americans when they say some others have taken advantage of the rules. I agree. We also suffer from it. So let's work on it. But tariffs across the board make things worse, not better. Tariffs are taxes that will be paid by the people. Tariffs are taxes for the Americans on their groceries and their medication. Tariffs will just fuel inflation, exactly the opposite of what we wanted to achieve. American factories will pay more for components that are produced in Europe. This will cost jobs. It will create a bureaucratic monster of new customs procedures. And today, nobody needs that, neither in the United States nor in Europe. So, our strategy builds on 3 pillars. First, we are open to negotiations. We will approach these negotiations from a position of strength. Europe holds a lot of cards, from trade to technology to the size of our market. But this strength is also built on our readiness to take firm countermeasures if necessary. All instruments are on the table. Second, we will keep diversifying our trade with other partners. You mentioned it, Antonio. Our hallmark is not only that we are the biggest market in the world, but that we are reliable and predictable. We honor our commitments. And that is exactly what our partners are looking for today. And my third point, we will double down on our single market. The single market is the cornerstone of European integration and values. It's our powerful catalyst for growth, for prosperity, for solidarity. But we have to tear down remaining barriers to have a single market to go big, because scale matters, and a single market to go fast and to go far. Now to the first point. Our immediate response to tariffs is unity and determination. I have already been in contact with our heads of state and government on the next steps. We have this parliamentary debate now here today, and we will assess tomorrow the announcements very carefully to calibrate our response. Our objective is a negotiated solution. But of course, if need be, we will protect our interests, our people and our companies. And I want to be very clear on the aim of our response. We think that this confrontation is in no one's interest. The flow of goods and services between us, the United States and Europe, is nearly balanced. Of course, we are willing to work on the trade balance of goods as well as on the trade balance of services. This is the largest and most prosperous trade relation worldwide. We would all be better off if we could find a constructive solution. At the same time, it also has to be clear. Europe has not started this confrontation. We do not necessarily want to retaliate, but if it is necessary, we have a strong plan to retaliate and we will use it. The second element of our strategy is diversification. Trade goes to where the business case is. We will open doors towards fast-growing markets across the world. Europe already has trade agreements in place with 76 countries, and we are now growing this network. We just concluded trade deals with Mercosur, Mexico and Switzerland. We launched the first ever clean trade and investment partnership with South Africa. We aim to conclude a trade agreement with India by the end of this year. We are in intense negotiations with Indonesia and Thailand. And later this week, President Costa and I will head to Samarkand for the first ever summit between the European Union and Central Asia. Europe has always been a trading continent. So let's connect with the beating hearts of the global economy. Our message is clear. Europe is reliable, Europe is predictable, and Europe is open for business. And the third point, honourable members, is unchain the single market. There are too many obstacles that tie down our businesses, and we have to do our homework. Mario Draghi is right when he says high internal barriers are far more damaging for growth than any tariff. End of quote. The single market, as I said, was born to tear down barriers between the countries, to erase customs and duties, and to make business inside the European Union as easy as possible. So we must go back to that idea and fulfill it. It must be easier for SMEs to sell the same product in all member states instead of relabeling it 27 times to comply with national laws. It must be easier for professionals to work across borders instead of getting stuck with different national bureaucracies. It must be easier for tech companies to launch a new service all across Europe instead of dealing with 27 different procedures. I know, honourable members, that the European Parliament has always worked hard to complete the single market. Now we have the generational opportunity to get it done. We have a strong consensus on the Draghi and Letta report among all of us. We have put ambitious proposals on the table, you know it, from the Savings and Investment Union to ensure that people get a better return on their money, but also that the companies find the finances they need in Europe, to our omnibus simplification packages or our Union of Skills, and more will come, including the 28th legal regime for innovative companies. According to the IMF, Europe's internal market barriers, are equivalent to a tariff of 45% for manufacturing and 100% for services. This simply cannot be. This must change now. This is why I have tasked EVP Séjourné to come up with concrete and bold proposals next month to remove most of these barriers and prevent new ones. These reforms are long overdue, and now they have become more urgent than ever. We all know, in a stormy global economy, the single market is our safe harbour. It's now 30 years since Jacques Delors laid its first stone, so it's time to finish the job. Thank you very much, and long live Europe.
Thank you very much.
Well, we're just a day away from what analysts expect to be President Trump's most aggressive tariffs move yet against America's trading partners. The president claims the tariffs will ultimately boost the US economy. But analysts warn his so-called Liberation Day could amount to a major trade war escalation, and it's putting investors, global businesses and consumers on edge. Well, CNN's Matt Egan is here to discuss this with us from New York. Matt, I know you've written an opinion piece today about Trump's tariffs for CNN Digital, and in it you explain that the crucial details of the tariff announcements remain unclear, as we all know, and even confusing is what the Trump's team's strategy is here.
Yeah, Christina, a lot of confusion here. The president seems to be trying to rewrite the global trading rules, but the exact rationale behind that really isn't clear, right? At times, Trump and his officials have suggested that it's to raise revenue. Other times, it's to help workers. And it's just not clear at this point. But yeah, tomorrow is shaping up to really be the biggest day yet for President Trump when it comes to tariffs. We're expecting a range of announcements. The biggest one is on these Liberation Day tariffs, what have been known as the reciprocal tariffs. Also expanded tariffs, perhaps, on Canada and Mexico, because some of the exemptions that were put in place a month ago are scheduled to expire. There's also potentially tariffs on any country that buys oil from Venezuela. And then the day after that, on Thursday, we're expecting more tariff announcements. The 25% tariffs on autos are scheduled to kick in. And also Mexico is expected to announce retaliatory tariffs. Now, the main event really is these Liberation Day tariffs. And investors are just desperate for clarity on exactly what that means. A number of ideas have been floated. But here we are, just a day out, and we really don't know what it looks like yet. In fact, CNN's Kevin Liptak reported that a lot of Trump's own advisors are actually still in the dark about what those tariffs mean. Although one thing that has been floated is that this could be 20% tariffs on most U.S. imports. And that is something that would be likely to alarm investors and economists. I just talked to Moody's Analytics chief economist Mark Zandi, and he told me that, look, 20% tariffs on most U.S. imports plus retaliation from other countries. He said that's a worst case scenario. That's something that would likely push the U.S. economy into recession and wipe out millions of jobs. But he said, you never know with the president, right? He has a tendency to sort of pull back and change course when things look dark. So we've got to wait to see what is actually announced. But what is clear is that Trump has used tariffs more aggressively than he did during his first term, right? His first term, he imposed tariffs on almost $400 billion of U.S. goods. Here we are, we're about 2 months into his second term, and he's already more than doubled that with tariffs on about $1 trillion of U.S. goods. Universal tariffs, that would be something that would impact more than $3 trillion of U.S. imports. I talked to Erica York over at the Tax Foundation, and she told me we've never seen anything like this. She said it's unprecedented and it's radical. And Christina, again, I do just think that investors really around the world are desperate for answers here on what the next front in the trade war looks like.
Yeah, and there is growing concern about a major trade war escalation coming. And in the last few hours, we have actually heard from Europe threatening retaliation. I think we have a soundbite from the European Commission President Ursula von der Leyen. Let's just have a listen.
We are open to negotiations. We will approach these negotiations from a position of strength. Europe holds a lot of cards, from trade to technology to the size of our market. But this strength is also built on our readiness to take firm countermeasures if necessary. All instruments are on the table.
All instruments are on the table. A red-hot warning, really, from Europe there. How much, Matt, are the US potentially about to feel the pain of retaliation here?
Yeah, it really depends on what happens next. But obviously, if Europe fires back by putting steep tariffs on goods that are made in America, that can cause real economic damage here because, say, you work at a factory that makes motorcycles, but Europe imposes steep tariffs. Well, the motorcycles that you make have just become less competitive. They've become less affordable overseas. And so maybe the factory doesn't need you to work as many hours. Maybe they're going to cut your wages. They might have to lay off some workers. And so that's how we kind of shift the conversation from just talking about what's the price impact to how does this actually slow down growth and potentially kill jobs. And that's why this is such a problem when you think about tariffs, because you can easily get into an escalatory cycle that's really hard to get out of, where one country threatens to put tariffs on, the other country promises to respond. And you know that if Europe responds aggressively, then President Trump is going to threaten to go even higher with tariffs. And then what is Europe going to do at that point? So it really does become very messy, and it just adds so much uncertainty and causes a lot of damage to the economy. And so that's why I think investors are hoping that Liberation Day won't be quite as bad as feared, because that would give some greater clarity and some greater certainty and sort of maybe take the temperature down a bit. If you see one of these more aggressive responses and announcements from the White House tomorrow, that's not going to sit well with investors at all. Christina?
No. Where does it end? And ahead of Liberation Day, I mean, US stocks have dropped sharply as investors tried to make sense of Trump's tariff plan, if indeed there is one. We've got the stock market due to open in roughly 20 minutes or so. What are you watching for today in the global markets?
Yeah, well, look, we saw the market have a pretty turbulent day yesterday. The Dow swung in about 1,000-point range, ended near the highest levels of the day. But you see U.S. stock futures, they're pointing to a slightly lower open this morning. That's not surprising, right? Anytime investors have a lot of questions about a policy announcement, they're likely to sell first and ask questions later. The market, the U.S. market, the S&P 500 and the NASDAQ, they both suffered their worst quarter since 2022. And a lot of that, again, was driven by worries about the trade war, about uncertainty around policy. And there's also just growing concern about these yellow lights that are flashing in the U.S. economy. Goldman Sachs, they ramped up their tariff assumptions and they downgraded their economic forecast for the United States, right? They're warning of slower growth, higher unemployment, higher inflation, and they now see a 35% chance of a recession. It doesn't mean there's going to be a recession, but clearly, Christina, there are growing concerns on Wall Street and really on Main Street about the impact of the trade war.
A lot of our grain and malts are sourced from overseas, from Germany and the UK, and that will impact a lot of breweries across the board.
I can tell you, our costs have gone up on our cans. There's nothing I can do about it.
Could soon cost you more to crack open a cold one. You just heard from those craft brewers in Asheville, North Carolina. That's because President Trump's sweeping tariffs are expected to go into effect tomorrow. So prices will likely go up. That part is certain. Another thing that's certain, markets don't like it. Here are the livestock futures in the red, where I think they've been the last couple days. Joining me now, editorial director for the Economic Innovation Group and host of the New Bazaar podcast, Cardiff Garcia. Cardiff, welcome to the program.
Thanks for having me.
Trump did tariffs in his first term. Biden actually kept some of them. What is so different about what he's doing now?
One simple, very big difference. both Trump 1 and the Biden administration largely focused on China. What's happening now is that the tariffs we're looking to implement, and some of the ones that have already been implemented, are large, much bigger, and indiscriminate. They're being applied to allies and not just to geopolitical rivals and not just to China.
You said indiscriminate. They use the term reciprocal, which means, look, they've got tariffs on us, we've got tariffs on them. Does that wash? How do you understand that definition?
Well, what's a little tricky about it is that we don't have the details yet. We'll find out a lot more tomorrow. But even then, the matter won't be settled because it's expected that a lot of countries are going to try to get exemptions for themselves. A lot of American industries and businesses are also going to try to get exemptions. In terms of the reciprocity angle here, what's a little bit tough to square is that other foreign countries, including the allies that we're likely to put these tariffs against, already have very low tariffs on the products that Americans sell to them. And so it's a little bit tough to see exactly what the rationale is going to be. You know, I'm awaiting this like everybody else.
Yeah, which gets to the point of uncertainty, which honestly seems to be my go-to descriptor, frankly, for so much of what's happening in the Trump administration. CNN's Stephen Collinson actually has a piece out this morning that says Trump has the world on edge as he mulls fateful tariffs, decades in the making. Can you talk about this on edge? Because when I kind of dug into the numbers I don't normally dig into, what I saw was just like, the uncertainty is creating a problem. Why?
Yeah, so it becomes very hard for American businesses to plan what they're going to do over the course of the next year if they don't know what a lot of the intermediate inputs that they use to make their products are going to cost.
So
right?
we heard from beer makers,
uncertainty.
they were even talking about the cans. We heard from coffee people earlier this week. And the Fed actually tracks this, right? They track uncertainty at the Federal Reserve of St. Louis. Can you talk about why and what it shows us if we were to look at it now?
Well, if you were to look at a chart now, I think what you'd see is that uncertainty is spiking. I mean, it's almost
a
vertical
so that
line.
So all the way at the end is 2025. And it's the one in the middle is COVID. So we're not in that level of crisis. So why is that number so high?
It's similar. And by the way, you can also see that in surveys of American individuals and businesses as well. They're really feeling
me, consumers.
You, consumers, people who are worried that unemployment's going to be higher in the coming year, that inflation remains persistently high. American businesses citing that uncertainty in how they make their plans for the coming year. All of that enacts a big economic cost. How big it's going to be, again, just depends on the details of the tariffs themselves and what comes next.
All right, Cardiff Garcia, I hope you come back, especially because we might actually know more in the coming days. Cardiff Garcia is editorial director for the Economic Innovation Group.